All right, let's go for this again and try Mortgage Monday video one more time. If I had a bloopers reel, there'd be one here somewhere. Reel, whatever. You know what I mean. There'd be one here because I recorded the whole video, posted the whole damn thing to YouTube and everything. Went back to finally link it to to HomeBot for y'all, and realized there was no audio because I didn't hook up the mic because I unplugged this and get it off my desk every time. So, anyways, let's get into Mortgage Monday, y'all. We're going to go over a couple things. We're going to touch base on the rates real quick, like we normally do, touch base on some upcoming holidays. Quick heads up, there's not a whole lot, just those standard one I've mentioned a few times. And then we're going to talk about the mortgage tip of the week in line with what I have on my Instagram account for y'all. All right, so first things first, let's talk about mortgage rates here real quick. So as always, these are coming from Optimal Blue, and these are the actual average locked rates across the most majority of the mortgages locked in the country. Locked rates meaning people that are actually closing on their loans, not any marketing stuff. Okay, so here's what we're looking like. Let me pull up some of the other standard options that are the most common. All right, so that's what we're really looking like. Yep, that's the one that doesn't matter as much. All right, so that's what we're really looking like. It's still in the same boat, y'all. Right around between 6.25 to 6.75 has kind of been the range things have been hovering. Unless you go with a 15-year mortgage, then you're going to be in the high fives, low sixes. Your rates payment is going to go up about 25% usually on that 15-year mortgage. It's not twice as much. It's just the way mortgage math works. But you'll pay it off a whole lot quicker. So those are those different options there. Again, you can see kind of the highlighted colors here, the terms there. Bottom line is if you're anywhere over 6.5, probably a good time to give me a call. All right, so that's just a little bit about rates. And you can come here, y'all. This is public information, nothing special. Check it out anytime. Check out the rate history if you really want to see how things are. We're looking pretty good over the last 2 years. There's been much worse averages. So we're looking good. Yes, things are trending up a little bit lately, but that's, the mortgage bond market, which is what makes rates, is just that. It's the stock market. All right, let's touch base on some dates that are going on. So jump over here. There's not a whole lot. The only thing that's going on really right now, dates wise, is the stuff I've been telling you all about a little while. School's coming up next month. Most everything starts either in locally on Central Texas area, August 12th or 18th. A few others start a week after that nationwide, depending on where you're seeing this, but just be aware of that. Big holiday season starts coming up in September. I think is it Labor Day? Is the one that comes up in September. So I'll keep you posted on that. All right, last but not least, let's talk about the mortgage tip of the week. Okay. This one is just really understanding the difference between pre-approval and pre-qualification. All right. And then there's also approval, of course. All right. Starting the first one is pre-qualification. What that really just means is you've done the application. And pre-qualifying means I've looked at your application, taken it for what it says, and says, based on what you've told me, you're pre-qualified for a mortgage up to X amount of purchase price. Okay. Depending on how much you're putting down and all the terms that you're letting me know you have available. But that again is just very service level. Now I want to tell you what's really important is even if you've ever thought about buying a home, do a pre-qualification. Do the application. Let me touch your credit. It's part of the process. Please let a mortgage professional be the one that looks at your credit and tells you what you need to do. Do not go to a credit coach. Getting higher credit does not mean necessarily the same thing as getting a mortgage. Okay, we just need you to have a certain number of credit, and we need to have the right things addressed the proper way on your credit, not just get things wiped off or get things contested is the word that comes to mind. I can't remember why. Disputed is the word. There we go. Just disputing things, even though it will help your credit, ain't gonna help you with a mortgage at all most of the time. Okay? There's a few caveats to that, but again, that's why you want to let a mortgage person look at it. So if you have any interest at all at buying a house at any point in the near future, years, do an application with me. Let me see if we can help you get into a home. That's all there is to it. And then we'll know what you need to do, or if you're ready to go, you might be more ready than you ever thought. Okay. So the next thing is going to be after pre-qualification is pre-approval. Pre-approval means I've taken all that information that you've told me, looked at it, said, hey, I need all this documentation to verify that all. And at that point, as a mortgage professional, I've looked at everything and said, yeah, you're pre-approved. I should have no issue getting you a final approval on a loan, subject to other terms that might come up like the appraisal and whatnot. And you're approved. You can get a loan. okay, or you're pre-approved, I should say. So we have all the documentation, you're good to go. We've got it all documented, ready to submit it to an underwriter. Only when it goes to an underwriter does it then get fully approved. And even then, again, you've got to get the survey, the appraisal. There's time-sensitive documents, so depending on the length of time from when you're under contract to when you're planning on closing, right? We might need updated documents between now and then, so we need to keep everything the same. There's the old thing that you'll hear from every single realtor and every single mortgage person. Please do not go apply for credit. Don't buy a car. Don't sell anything without telling us. There's things that may change just by selling, like a car, for instance, is the most common. So that's really your 3 steps. After that, that last part, we get all the documents, we submit it to the underwriter, they review everything, we get all the time-sensitive information, and then you're approved. And then you're usually closing a week or 2 later from that final approval. All right. So pre-qualification, pre-approval, approval, all parts of the step. But the bottom line, the big takeaway I want you all to think about is get that pre-qualification. As soon as you have any interest in buying a home, it doesn't mean you have to buy a home when you do the application. It lets us let you know what you need to do, and then you might be more ready than you think. All right, y'all. That's all I got. Y'all have a good one.